Hey everybody, welcome to another Midas Letter Daily, and I'm here as usual with my good friend and co-host, Special Edward Molesky. How's it going, Edward?
It's going well. It's going well.
Did you freeze your nuts off on the way here today?
It's a Brumal day.
Brumal?
Brumal.
Brumal.
B-R-U-M-A-L.
Brumal. I've not ever heard that.
It means a wintry day.
No kidding.
No,
a new word.
No
Jesus,
kidding.
you must have had to work. Where'd you come up with that word?
That was on the Johnny Carson show.
Oh, okay. Well, so it's an old word.
With Tony Curtis.
Huh. Tony Curtis.
Tony Curtis used to come on and always talk about
when he was alive. In terms of our show today, our guests today, so Dr. Mark Swaim joins us. Dr. Mark Swaim is the founder and editor-in-chief of biopub.co, and he is going to talk to us about 3 biotech companies, 2 of which are Canadian, which I thought was interesting. AcuRx Pharmaceuticals trading on NASDAQ, Medicenna, one of the Canadian ones, and NerveGen Pharma, which also trades on TSXV, is another Canadian one. So he's going to give us the logic on that. He is obviously long. And then we have Greg McKee joining us, and he is the CEO of TRYP Therapeutics, trading on the CSE under TRYP, and he's going to tell us why we should be looking at that company. Anyways, all coming up. If you're enjoying the show, subscribe to Midas Letter on YouTube so you stay up to date on everything investment. Okay, here's the questions. Pinso, with the uncertainty in markets, what are you currently bullish on? What am I bullish on? You know what I'm bullish on? I'm bullish on real estate. Because I think that, because we have the...
like farmland or real estate in general?
Farmland.
Well, that's not what you said.
Real estate.
Yeah, but that means...
Farmland's not real estate?
What about the real estate in big cities? That's
don't buy that shit. No.
That's real estate.
Well, yeah, but that's garbage real estate.
But you didn't say that.
Well, but I'm saying it now.
Okay. Farmland. You're talking farmland.
Vacant land, developmental land.
You know who's behind you on that one, of course, is famous Jim Rogers. Jim Rogers, yeah? Yeah, he says copper, silver, farmland.
Wow. Well, hey, maybe I'll get a motorcycle and ride around China too. Hugh Mo wants to know, how soon can we expect rate hikes? Well, according to Jerome Powell, March. But he hasn't committed to that firmly. In fact, one of the characteristics I would say most characterizes Jerome Powell's speech yesterday during the press release is that he makes it very clear that he is not committing to anything. They might reduce rates, they might increase rates, they might reduce stimulus, they might increase stimulus. Not in those words, but that was certainly the sentiment that I heard in his unwillingness to commit concretely to any of the policies put forth, stipulated in the press release. Spork Party.
Can I just say something?
Sure.
You know what we didn't mention? We didn't mention the fact that oil is now trading $88. I'm not so sure.
86.
Okay, so it's come off
West Texas oil, yeah.
It was, I think it hit 88. Is that 88 there?
It touched a high here of 88.47.
Okay. And it's come, well, you know what? Look, the point is
still 86.
86. Oil gets up relative to everything else too high. It makes everybody nuts.
I read a headline in Google News feed. I can't remember, was it on CNBC? But anyways, the question was, or was it Bloomberg? The question was in the headline, is oil going to $300 a barrel? Now, this is interesting to me because Goldman Sachs would certainly like you to think that. And it's very typical for the largest banks to be projecting an expectation for higher commodity prices in a period where tech stocks are expected to sell off. Now, Goldman Sachs, for its part, says everything's going to continue to go up, which suggests that they're not short anything yet, that they're getting short everything. Anyways, that's all speculation. Nobody knows.
Yeah, I don't know.
It's impossible.
I don't know, but oil, in the mid to high 80s is problematic.
Yeah, to what extent do you think this oil price is relative to the situation in Russia?
Well, that's the problem. That's why I just look at the price. Because trying to figure out the whys of it all is pointless.
Yeah.
Can you latch onto a direction and make some money?
Spork Party says, I'm interested in buying long-term calls on PSIL. My mortgage broker says no options are currently available at the discretion of who is running the ETF. Do you know if there is a benchmark for allowing options activity for something like this, or is it just whenever they decide to allow it?
They want
PSIL is the psilocybin ETF.
Right.
Basically the Psychedelics ETFs.
He wants to buy long-term calls, leaps. Yeah, maybe there's just not enough interest at this stage. If there's interest, they would do it.
Yeah, and really when it comes to writing options, all you need to do is find a counterparty. So I suspect that depending on your size, sport party, if you are willing to float a big enough bet, that you just need to make more phone calls and find somebody to write that other side of that contract for you.
Yeah.
And so yeah, Schwab's probably not there because there's not enough interest, but you need to get a bunch of buddies together and express interest to Schwab if you have that level of connectivity with the company. Otherwise, you'll always find somebody who will write the other side of an option for you. The question is,
it's big enough.
Yeah. Well, and not even if it's big enough. If you're unsophisticated enough, and the counterparty thinks that you are unsophisticated, then they will write the option even if it's small because they figure they're just going to take your money off you. And that's what you got to be careful of when you're writing a private option contract. The variables that can go into an option contract are legion. There is no limit. There is no standard. There's not excessive regulation on it. It's basically Wild West country. Is there a benchmark for allowing options? Allowing is the wrong term for originating options. At what point is there sufficient interest where a broker like Schwab would be the counterparty on those options? That's the question you're asking, and I don't know. I don't think there is a benchmark. It's all about size and quantity.
If they're trying to get a listed option, like where they trade, you can follow them.
Right.
Yeah, there's got to be a protocol. There's got to be a way.
Only a bank or a registered broker can write an option that is tradable. Outside of that, if you're an accredited investor, you can get your mother to write you an option if she's willing to take the counter trade, assuming she's accredited as well, and the terms of the option or whatever you agree on. So it's not a case of when they decide to allow it. It's if anybody decides to be the counterparty based on a clear perception of interest, should they undertake the expense. So they got to get their lawyers together, come up with a contract, standardize it.
Maybe a good idea to get a member of your family to take the other side. So if it goes wrong,
that might not be a good idea, though.
No, but think about it. If it goes wrong, you just say, "Oh, well, we're just kidding."
Things might get a little hot around Thanksgiving then.
Ooh, no leg for me.
Yeah, you little son of a bitch! You ripped me off and stiffed me with that stupid psilocybin option.
Turkey neck.
Yeah. What happened to Johnny? Old Granny cut him up and put him in the pot because he stiffed her on that option trade. Bull Traders has a question. I'm starting out my career in finance. Do you have any tips or advice?
No tipping.
Yeah, advice. Here's some advice, and this is courtesy of Mark Twain. If you want to double your money, take it out of your pocket, fold it in half, and put it back.
Yeah.
Any advice? Well, let's see. Never bet anything except money you can afford to lose. Never have an expectation of, here's my advice. No matter what anybody says, there is never better than a 50-50 chance of a positive outcome of any bet on anything in any asset class anywhere.
No, I don't agree with that.
Well, see.
I'd say if you're flipping coins, but there are.
Oh, so now you do agree.
With flipping coins, but we're not flipping coins here. It's a stacked deck.
Okay, so let's say, so what can I buy today and guarantee that I'm going to sell it for an increase in price tomorrow? Guaranteed.
Well, if you bought a bond that paid an interest rate, right, and the principal was guaranteed back, right? It's called guaranteed GIC.
Well, okay. All right. But is that, if you buy a bond and you get the face value back, and the interest rate is 0.25%, but the inflation rate is 6%.
That's how you said.
But we're talking about a positive experience.
Yeah,
positive experience implying that it's a successful trade, i.e. you made money.
Yeah, you made some money.
No, you don't make money.
Yeah.
If you get paid 0.25% and you redeem the bond at face value and inflation is 5%,
right,
you lost money.
Okay.
Don't you think?
Does anything make money?
Nothing makes money. There's no such thing as making money. It's all bullshit. KK is asking, how much area do NuRAN's 2,492 towers under contract cover? How much area does 5,000 cover? We don't have that information, and we're not willing to make casual interpretations of all the statements that are out there because there's so much sensitivity on the part of shareholders out there that we're not going to make those statements anymore. We're only going to let the company make them. Thank you, KK, but we have no comment. Austin M, now that we are almost officially in a bear market, do you see this as an eventual positive for buying opportunities for long-term focused investors? Well, as Rick Rule likes to say, bear markets beget bull markets and bull markets beget bear markets. So in a bear market, there's always a point at which there's going to be a reversal. So yeah, it can be seen as a eventual
We're closer to the turn than we were before.
Well, and if you're a short strategist, a bear market is a blessing. Because basically if everything's, it's just like being a long investor in a bull market, in a bear market where everything's going down, it's a dream. The problem is it becomes a crowded trade to the short side, and the cost of borrowing
a nightmare?
Goes up. Well, the cost of borrowing the shares goes up.
How about the meme stock? Short cover rally.
Meme or mem?
Meme.
Or meme?
Meme.
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 So is that those meme stock guys are calling for their mommy?
Regression. Is this regression analysis?
I think that's regression.
When Freud would he agree? We'd say, no, there's a couple of the fucking wackos. Look at them.
Those guys have lost their deals. They're definitely heading back.
They've got issues.
Infirm.
We go back to the word conflicted.
Well, see,
back to the word conflicted.
And when you get infirm in your old age, you become an infant.
And you don't have any more firmness.
No, your stools especially. That's when you ship your pants. That's when it's time to buy pants.
Can I ship my pants?
Can you ship your pants?
I'd like to ship my pants.
All right. That's the end of the questions. If you like the show, you'll love our website. Visit us at www.midasletter.com for interviews with key CEOs, cannabis news, and to subscribe to our newsletter. So Dr. Mark Swaim joins us. Dr. Mark Swaim is the founder and editor-in-chief of biopub.co, and he is going to talk to us about 3 biotech companies, 2 of which are Canadian, which I thought was interesting. My next guest is Dr. Mark Swaim. He's the founder and editor-in-chief of biopub.co. Mark, welcome.
Thank you. Glad to be here. Really nice.
Mark, it's an interesting time to be having a conversation about biotech investing as markets are clearly heading towards bear territory at the opening part of 2022. But that often results in great buying opportunities as valuations deteriorate when the reversal sets in. So why don't we talk about, first of all, tell us about your publication and what is the value proposition for your subscribers?
I'm an MD PhD by background. I practiced medicine and was a faculty physician at a couple of good institutions. And sort of with the advent of Obamacare, I kind of grew disenchanted and was thinking of sort of a change and had been dabbling in biotech investing. And frankly, not to blow my own horn, not to self-preen, but had done really well at it, just sort of picking things from a physician and scientist point of view, looking for things that were leading edge science that would also leave the practice of medicine permanently changed for the better. And what I realized as I was looking around, and I think that real insiders in biotech would kind of agree with this, is that most of the biotech investments out there just really are frankly just not investment grade when you look at them through strenuous eyes. And we focus on finding those things flying below radar that are special situations, unrecognized gems, typical market cap 100 million, where we think the science is just extraordinary and that a breakout is looming that it's just not been noticed yet. And I think we've done pretty well at that. We don't feature a company unless we interview management, sit down with them, and unless we've really gone through all the basic science and the clinical ramifications of it. But, many of the things in our stable of companies really are very attractively priced right now. You're right. After the bloodletting of, the last quarter, the final quarter of last year, and the way things are priced right now, it's a lot of bargains.
Sure. Okay, so why don't we talk about some of the companies that you've been featuring, among them AccuRx Pharmaceuticals, a NASDAQ traded company, ACXP is the symbol.
Right. We love AccuRx. It's actually a company that Biopub readers provided the initial startup funding for. Oh. We kind of did a barn raising there with collaboration of the two founders, a dynamic drug development team, David Lucci and Bob De Lucia. And they addressed the growing antimicrobial resistance issue with the first new class of antibiotics for human use in 30 years. The company went public on NASDAQ in June of last year. It's trading a little below that debut level right now, but has a drug that we predict will become first line or first choice standard of care for Clostridium difficile enterocolitis. That's a trenchant infection that sets in the setting of other antibiotic use, usually afflicts hospitalized patients and leads to a debilitating watery diarrhea that can lead to hypotension and renal failure. And right now, the antibiotic arsenal for C. diff is barely there. It's essentially dried up, and we have an agent that will eradicate C. diff from the GI tract completely within 72 hours. Thus far in clinical trials, have had no relapses following therapy, whereas the normal expected relapse rate is 20 to 30% after treatment. It's an oral agent. We think this will be very attractive to a larger pharma buyer because this is a total addressable market of at least $1 billion annually, and that's North America. So, right now the drug is in a clinical trial for non-inferiority against standard of care vancomycin, and it's really just, to any rational observer, highly unlikely it would fail that trial. And so we have a drug, ready to come on and, drag an apparent really just to take over the space. We surveil the space continuously for competition or are not seeing viable competition. And I think we have a killer drug. It's a new class called the DNA polymerase 3C inhibitors. The team that devised it, David Lucci is a New York City former merger and acquisitions attorney. Bob De Lucia was a executive with Sanofi North America for decades, and a very good team. And we think it's just going to the moon. In fact, our model, based on comparables, based on the size of the market, based on where we think the drug will be priced, based on the need for the drug, would put it at probably ending this year at about 12 to 13 times present share price. It has no near-term plans to raise any capital. It's fully funded through the present 2B trial, and really following phase 2B, their plan is to shop it around because we think that large cap pharma would probably be interested in grabbing the company at that point. Very appealing agent, very stubborn disease to treat, and a dreaded disease because right now, if you get it, there's not a lot that we can do for you aside from multiple rounds of vancomycin, which is so destructive to the bacteria, the healthy bacteria that you have in your GI tract, that you set yourself up for relapse that way. So probably once ours hits the market, vancomycin will disappear from clinical use. And we love the company, love the management, have been privileged to work with them very closely in bringing it to market, and know that they have extreme integrity, extreme high ethos, and are nothing but enthusiastic about it. As you can imagine, personally own shares, and it will be adding to that considerably this year. So great. We look for the inflection. I think right now for the immediate future, share price probably going to stay kind of down low. The trial in question, the phase 2B, is going on now. Probably going to be more close to the summer or spring when we get a readout from that. That's when it will inflect. So you got some time.
Got some time to accumulate. That's good to know. Okay, tell us about Medicenna, which trades on NASDAQ under MDNA.
Yeah, we love Medicenna. It's a long-term holding for me and a long-term member of the Biopub stable. It's based in Toronto. I think maybe you are too, perhaps.
Yeah.
It's run by a scientist named Fahar Merchant. Fahar is sort of the king of the structure-function relationships in proteins. In other words, how can we take naturally occurring proteins and modify their structure to really do nature one better? The first molecule that they promulgated is something called mDNA55. And the explanation of what that is, it does not occur naturally, but it's a combination of two proteins. And the end result of it is that used against glioblastoma multiforme, a dreaded, universally fatal brain tumor, it can extend survival, does extend survival in that disease by 150%. That's, you don't see, I mean, cancer medicine is so full of base hits. That's not a base hit. That's giving somebody a meaningful period of time to do the things they want to get done before life is going to end. And it's kind of a miracle, really. No one expected that kind of increment in survival, and yet there it is, and very reproducible data. So the company is now searching for a partner to complete the phase 3 development of that molecule. They'll find one. And it would have a very robust market. Despite the relative rarity of it, this would be a fairly expensive drug to use. So revenue prospects for it are very high. The second molecule they're working with is a bespoke or sort of tailor-made derivative of a naturally occurring molecule called interleukin-2. And think of an orchestra. It's got all these players in it, and one guy, Herbert von Karajan or Eugene Ormandy, somebody who's very powerful, conducting them, telling them implicitly what to do. IL-2 is like that for the cellular immune system. When you have cancer, that's a wholesale categorical failure of your immune system to do something about it, to snuff it out. And IL-2, given as a therapy, can really exhort the immune system to go after cancer as never before. Now, the problem with Proleukin, the original form of IL-2, was that 20 years ago when we first started trying it in patients, it killed some patients. And the others that it didn't kill almost wish they were. It made them very sick. And so Fahar and Associates have modified the molecule so that they've stripped a lot of the toxicity out of it, but actually potentiated its immune driving capability. It's very promising, and it would be combinable with, you've heard of, everybody's heard of chemotherapy, obviously, but combinable with radiation, with checkpoint inhibitors, with multiple modes of chemotherapy to create a kind of very elaborate cocktail. And certainly 20 years ago when Proleukin, the original molecule, was tried against cancer, it had great efficacy, no question. I mean, it could just drive, bad recalcitrant tumors into regression, but it killed patients. It just was a horrifying drug to be on. So,
wow.
So big hope on that front. And then the company has a slate of these other tailor-made, bespoke molecules that work in, fairly ornate ways, and, just has a long pipeline of them to develop. We have great confidence of Fahar, total integrity, very honest, loyal to his scientific origins, and bit of a small company, but I would say, based on our models at Biopub evaluation, that this company is trading at no more than 10% of where it should be.
Wow.
It's just a bargain sitting there. And I mean, why aren't people grabbing it? I don't have a good answer for it. I think that the story is rather sophisticated. Many people need a little hand holding to understand the science, but no question the oncology community is going to sit up and take notice here in a big way. And, have a big position in it. We think it's very promising, and total confidence in their ability to do the right thing, developing it and to execute. And they're great people. They really are. Right.
Okay, and finally, tell us about NervGen Pharma Corp.
NervGen, boy, I may start to exult and go a little crazy here, but when you think about investing, NervGen's in Vancouver, also Canadian. Tip of the hat to the Canadians.
Yeah.
When you think about investing, it's the nitty gritty of it is like, how much am I going to make, and in what period of time might I make that as far as profits? And of course, we never know for sure, but our projections are very robust for NervGen. It's is sort of the dragon apparent, as if you will, in neuroscience, because of lead drug NuRAN 291, which has a number of abilities to facilitate neural regeneration, neural healing, synapse formation, the immune system behavior of the neurologic system, and it's a pipeline in a drug where literally, if you sit down and know all the properties of the molecule and think clinically of all the ways you could use it, you come up with about 30 indications right off the bat. Their lead indications will be, first of all, spinal cord injury, because in the animals that they have injured the spines in, they can cause those spines to reheal, to reanneal, and restore ostensibly normal gait. It may not be right down to the letter normal, but it's so close that a trained observer is needed to tell the difference. And then also multiple sclerosis, which is where the so-called myelin sheath of nerves that protects them gets these rat-bitten areas where the immune system takes hold of it, and it will cause healing of the myelin sheath. There's also interest in using it for Parkinson's disease, potentially for post-stroke recovery, because it can drive neural regeneration. And the list just goes on and on and on. And if you start to model the values of each of those indications and where other companies with strong drugs in those spaces are, of course, this presumes that it's going to work in every indication, may or may not. We don't really know, but it's easy to come up with a plausible model. Plausible, I didn't say it will happen, but plausible, in which a $10,000 investment here morphs into $1 million in value over 3 to 5 years. I don't think that's a crazy model when you really sit down and do the homework with what they're doing. The thing that we're particularly excited about is that Alzheimer's disease, when a company in biotech claims or reports that it's got an agent that's a contender for treating Alzheimer's disease, immediately a kind of frenzy of buying goes on, and those market caps are driven way up to $1 billion and beyond. Of course, they can fall rapidly if the drug is disproven, which often is the case, but they plan on using NuRAN 291 as an entree to treat Alzheimer's disease because it resets certain cells in the brain to a non-inflammatory state. They're called the glial cells. It cools them down. And in animal models of Alzheimer's, which are limited, but it results in marked improvement. And then the theoretical basis for stark improvement is there as well. Nobody's saying it's the cure, but I think there is a widespread consensus among leading neuroscientists in Alzheimer's disease that this looks like it's probably going to help in a big way, which really nothing else has today. So when those things begin amassing and sort of summating and piling up, this company is maybe at 100 million market cap now. It's just going to go right on up. It could. Right now the drug is in phase 1 testing to exclude toxicity. But it will rapidly move into proofs of concept, early trials in patients with disease to see if there's any signal of efficacy. And I think there's going to be a rally around it, a fierce one.
You bet.
So I love the company. I've never seen a biotech investing opportunity come even close to it, and potential for mind-blowing yield, really. So it's my biggest investment.
That's great. Oh, is that right? Eh? Okay, well, great. Mark, that's a great introduction to your publication and very fascinating. We're going to have you back soon. I really appreciate your time today.
Love to come back. Thanks very much. And log on, check us out. We love to have people as readers and participants. And, we kind of specialize in finding situations like the 3 I just described. Got plenty of others too.
Sure. We'll be sure to put up the URL on the end of the interview. Please, that'd be great. Nice meeting you. Appreciate you having me. You bet. We'll see you soon. So yesterday, Jerome Powell and the Federal Open Market Committee came out with their policy statement on the plans, the first policy statement of the year. And rather than paraphrase, we're going straight to the language of the release. The committee decided to keep the target rate for the federal funds rate at 0 to 1/4%. So in other words, there is no immediate plan to raise interest rates. With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate. Expects it will soon be appropriate, not we're going to raise rates. We expect. The committee decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. Beginning in February, the committee will increase its treasury holdings of treasury securities by at least $20 billion a month and agency mortgage-backed securities by $10 billion a month. Okay, so since March 2020, the Fed has been printing $120 billion a month in combined asset purchases, treasuries and mortgage-backed securities.
Still printing money.
So they reduced that to $105 billion on November 1st.
But they always make it sound like they're not printing money.
Well, exactly. They always couch it in terms of we're going to print more money. Not we're going to, they say they're going to reduce the amount, but then they say we're going to add to the, so it's very confusing. And by design, I might say. So this is basically saying they're going to reduce the asset purchases starting in February from $105 billion, including the $105 billion for January. And then beginning in February, the committee will increase its holdings of treasury securities by $20 billion per month and mortgage-backed securities by $10 billion a month. So it's going from $105 billion to $30 billion in the month of February. And then the committee decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. So in other words, February is the last month where the Fed is buying treasuries and mortgage-backed securities, but it does stipulate that it will continue to roll over maturing securities into the portfolio. So there is no immediate taper, but there is in February, and there is no immediate rate cut. That being said, what happened? We saw big sell-off in the market almost upon his opening his mouth. The futures for NASDAQ, S&P, and Dow ETFs and futures both sold off dramatically right at the outset. And in fact, if we go to our charts here, starting with, well, why not? Lumber. Look at lumber falling off here.
Yeah.
So this is lumber, random lengths, which had set a new recent high of $1,350 per 1,000 board feet and has now sold off by approximately 25 to 30%.
Volatile, Jesus.
Since yesterday. Since yesterday. So now, if we look at these are the futures for NASDAQ, the NASDAQ 100 E-mini futures, now selling off dramatically. So this is an expectation of where NASDAQ, what's going to happen in NASDAQ. At the same time, NASDAQ at this hour...
Are those the NASDAQ futures right there?
This is now the NASDAQ 100 is down 1%. The Dow Jones Industrial Average, as we speak, is down, or is up 0.05%, so barely holding on. The S&P 500 is down 0.3%. So despite all of the intervention, the buying in the futures markets, the Fed and related parties...
We're near the lows of the week. Well, you know when this thing really started to pick up steam? Well, we were doing last week's show. Just after that, I remember getting back and then looking at how the market closed that day. And then it fell into Friday. Friday was the biggest day of put buying ever.
Let's look at the S&P. So November 1st is when they came out and said, we're going to reduce asset purchases from 120 to 105 starting in November. And, you know, that didn't really seem to slow things down. In fact, the peak of the market is the peak for the year in retrospect. But since...
Yeah, you know what? That was when Apple hit $3 trillion.
Well, this is actually, so this is January 10th, is the day that Jerome Powell testified to the Senate Committee on Banking, confirming his second term as chairman, that he said, yes, we were going to proceed with 4 rate hikes and continue to reduce stimulus. And that's when the market said, okay, he's not joking, this time it's for real. And this is the sell-off that's happened since January 10th, since Jerome Powell was confirmed for a second term.
Well, look at this. We're all the way down to here.
Right. Well, the interesting thing is this is yesterday. Or no, sorry, this is day before yesterday. This is yesterday. And the interesting thing is that this was all, you know, there was a lot of hot air blown into the market.
Part of those lines are volume lines, too.
Yes. There was a lot of effort, hot air being blown into the market to paint the tape in a favorable fashion during the day that he came out with a press release saying that we were going to, reduce stimulus but hold off on raising rates till at least March.
Yeah, well, it's been by a lot of standards some of the worst market the last few weeks. January is one of the worst Januaries of all time.
Yes. And now if you listen to the standard round of talking heads on CNBC and Bloomberg, you've got most of them are, supporting the Fed and saying, yes, the economy can handle this. You've got the odd outlier, Jeremy Grantham, was it?
Jeremy Grantham.
One of them who said that the biggest crash of the century is nigh on.
Well, he's talking about this being a super bubble.
Right.
Super bubbles are, 3, 4, 5 times bigger than the average bubble. This has gotten, look at how much money they printed since 2008.
Well,
and then at the very end, because of COVID.
Yeah, well, they added when the market, so the last real market correction, and it doesn't even show up that much in here because the market's been so on fire.
No, what is that? Is that the last year?
So let's go to the 5-year look. Here's March.
Yeah.
This is the end of February 2020.
Right.
So this was a 30% correction from this level. And this is where the Fed announced spending
more money than they were ever going to spend.
Purchases from 85 billion to 120 billion. This is where 120 billion a month started. And this is where they committed to holding rates below 25 basis points. Now, since then, let's take a look at the 10-year. So the Fed reference rate on the U.S. 10-year is 25 basis points, and yet the 10-year bond is trading at 180 basis points. So what does that mean? When the market is displaying such a split from the Fed reference rate, that means that nobody's actually accepting 25 basis points. So this is so not just unprecedented, because there's never been a balance sheet unwinding of this magnitude in a year.
But there's never been a balance sheet expansion like there's been.
Well, there's been 10, 12 years now of balance sheet expansion.
I know, but no cutback.
Yeah, yeah, exactly. No tightening, no reversal.
Now, do I hear the roosters?
Well, this is the thing. Or
it should be the chickens are coming home to the rooster.
Something like that. But the bottom line here is, while you've got Bay Street and Wall Street and everybody on CNBC essentially signaling that, yes, it's time to taper and yes, it's time to raise rates, what's actually happening and what is going to continue to happen, in our view, I'm going to say, is that the market is going to sell off relentlessly until the Fed backtracks on raising rates and backtracks on reducing stimulus.
That's quite a courageous call.
Well, I'm only looking at the last time, the number of times.
You know what? It's funny you say it, because I heard it on the TV this morning. Somebody saying, "Do you think there's going to be a backlash here?"
Right. Well, this is the thing. I mean, if you're a long NASDAQ tech fund and you're guaranteed 25% per year payday because the Fed is buying all this paper is over, then why would you leave your money in there? Wouldn't you pull it all out just to see where the chips are going to lay after it's all said and done? Is the Fed actually going to proceed to reduce
chips
stimulus?
are going to lay, or chicks are going to lay?
The chips are going to lay where the chips fall.
The chips
fall where they may.
The chicks are going to lay.
The chips might fall where they lay.
Well,
the chips might fall where the chips
you
lay.
have to admit, you can see some crazy shit happening here in the next few months, because the valuations are they're just still ridiculous. Yeah, ridiculous.
Going back to the charts, Edward, what do you think we should look at first?
Well, I think we should look at maybe the NASDAQ.
Okay. Not the futures.
Well, it doesn't matter. One falls the other. Look at that. That's the sort of your basic top, and there's the breach there. That's the last 10 days, probably 5 to 10 days.
Well, this is 3 days ago, right here.
Yeah, there you go. 5 days ago. Well, a week ago. That's when it broke down.
Yeah. Well, arguably, this is where the trend broke, right here. Wouldn't you say?
Well, look, that trend there broke somewhere around here.
Yeah.
Then we had a downward trend, we had an upward trend, down, up, down. But look at the severity. And if you go back a little further, that ball blew up. Look at that. Yeah, I'll tell you, we may be range bound here, and that's like a shoulder, a head, and now we're going to make another shoulder. And then when that craps out, I think a lot of people are nervous right now.
Oh, I'm sure. I'm nervous.
Bill Ackman,
are you nervous?
No. Well,
so what do you think we should? What would your move be in the face of all this?
Right now,
look at gold. Look at
right
gold.
Now, I wanted to say I wouldn't buy gold right now, but Bill Ackman went in and bought $1 billion in Netflix.
Yeah, but he's not exactly batting 100.
I think he had a pretty good year. I think he had a really good year.
Well, that's because he got so much free money from the Fed.
Whatever. I'm just saying. Look, I tell you right now, there's been a lot of damage. But I don't think there's panic setting in yet because everybody thinks it's going to come back.
Right. So you think that the market has a chance of being able to digest this news and sort of sail along sideways for a while?
For maybe 2 to 4 weeks. 2 to 4 weeks. And then if nothing gets going, then we resume the downward trend.
Okay. Well,
something like that. But that's just my view, my humble view.
Yeah. Well, that's all we have here is opinions.
Opinions are like assholes. Everybody has one.
Got one. Some people have more than one.
What about you? You're a little more, you think it could happen faster?
I don't see how there's any possibility other than the market selling off
until
the Fed blinks.
You may be right. I mean, that's how it's happened in the past, right?
Well, that's just it. Every time the Fed expresses a hawkish viewpoint, the market rewards it with calamity and declines. Yeah. The Fed blinks and becomes dovish again. That has been the trend since 2009. So why would it change now? And I don't think it can. I don't think the Fed has the optionality. I think the Fed's just projecting this perception because they know that this is untenable.
Yeah, well, we're going to find out.
All right, let's take a look at crypto here.
Just pointing out here, this trend here, and then a crap out, but right back up, a resumption of trend. Yeah. From there to there, I don't know how many months that is, or whatever, and then break down again. Looks like this is breaking down. Look at it's tricky. It's tricky, but you know what I heard yesterday? That a couple of mayors, M-A-Y-O-R-S, mayors of U.S. cities are taking their pay in Bitcoin. Have you heard this? No. And athletes are taking their pay in Bitcoin, and it's starting to hurt them. Am I hearing this? Is this really going on in America?
Well, the Salvador government, which made crypto legal tender, is down 30% on its position. Well, a little less than 30% now that there's been a bounce to 3,600.
Right.
But they're down on their position. Can you imagine taking the reserve of the country and putting it into an asset that fluctuates 14 to 15%?
Remember though, they have an excuse. It was a politician that made the decision.
Yeah, but it's the height of foolhardiness. I mean, your currency, your legal tender has to be something approaching stable. Like, countries have pegged their currency to the US dollar because it's more or less stable relative to other currencies. If you were to compare all G20 currencies to Bitcoin, they would be all in a straight line, and Bitcoin's degree of volatility would be way out there. So, I mean, anybody who takes their pay in crypto deserves exactly.
Well, what's this low in here? Is this around 33,000?
That's 32 and change.
Yeah, okay. A couple days ago,
Yeah,
and here we are right now, about 36, 37.
Yeah, well, it's trading sideways. It recovered at 36.
Well, it got to 38, I think, right back in here, no?
Yeah.
Like here.
Yeah.
Yeah, that might have been.
But, there's definitely.
Well, look, it's now in the high 30s. But you see how it makes you think? Like, it always sharp drop and then slow going back. Distribution.
Yeah.
It's classic. I'd be very leery, folks. There's some ugly shit happening, I think.
Yeah, I think you're right.
Yeah, and
anyways, we have another Psychedelics CEO to join us today. And here's Greg McKee from TRYP Therapeutics. Greg McKee joins me now, CEO of TRYP Therapeutics, trading on the CSE under the symbol TRYP, and in the United States under the symbol TRYPF. Greg, welcome.
It's great to be here. Thanks for having me on today.
It's awesome to have you on, Greg. Let's talk about your business. What is the business of TRYP Therapeutics?
Yeah, so TRYP Therapeutics is a psychedelic drug development company. So we're working on commercializing psilocybin for a number of different unique therapeutic areas in chronic pain and eating disorders.
That is fantastic. There's been a real explosion in companies using hallucinogenic, psychedelics, whatever you want to call them, for just a whole rash of things. And so that's interesting. Are you finding that there is a competitive, like a lot of competition in the landscape for you, or at this point is your niche area sufficiently sort of new that there's not?
Yeah, you know, so you're completely right. There's a lot of activity going on in the psychedelic drug development space right now. It's a very exciting field, and we're really happy to be, part of that. But we've also, after a completely different, niche of these different, patient populations, specifically in the chronic pain and eating disorders area. So it's a lot less crowded in the areas that we're working in. We decided that there's already plenty of other companies working in depression and PTSD and anxiety, and that's terrific. And we're certainly, out here rooting on the sidelines for those companies to be successful as well. But we think that the value that TRYP Therapeutics is going to bring is all going to be around taking these chemistries, which are known to be active, which are known to be well tolerated, and point them towards these other patient populations that have high unmet medical need.
And so is the psilocybin-based product that you've isolated, is it essentially the molecular form of the psychoactive compound?
Right. So there's two things that we're doing, right? So one thing to differentiate us is to go after these novel indications, as I already mentioned. The second thing that we're focused on, and we know is important for the industry, is to frankly come up with a secret sauce, right? Really, different and unique, and not just from an IP perspective, by the way, right? We know that there, frankly, hasn't been a lot of traditional pharmaceutical development of these chemistries, although there's a lot of anecdotal evidence, there's a lot of recreational use, of course, over the decades. And there's even academic studies that have been done. But we know that kind of the traditional pharmacology, PK/PD, as it's called, and other early work has not really been rounded out like it typically would be. So, and we know that one of the major problems right now is that if you take that there's a lot of inconsistencies in the experience that patients have. Some never enter the psychedelic state. Certain patients will enter the psychedelic state and have, they'll have a journey that's 8 to 10 hours long, which is really problematic from a bunch of different perspectives, including in terms of having psychotherapists in the room for that long period of time, and also in terms of commercializing it. So, well, we think that the issue to solve is coming up with a different formulation and a different route of administration of something that's akin to psilocybin. And you sort of hit the nail on the head there, that psilocybin is the prodrug, active ingredient that puts you in the psychedelic state. So we think in that mix, without being too coy, is an interesting formulation coupled with an interesting, pretty standard route of administration that will create a much more consistent experience for patients, and also one with potentially a better safety profile. So that's what we're working on, and what we are calling TRYP 8803, which is our proprietary formulation, our proprietary route of administration of this psilocybin-based chemistry.
Sure. Point when you talk about the requirement for a licensed professional to be present at any point during a patient's exposure or therapy, if you will. And I'm curious as to, there's some companies are actually saying that they've got 2 people in the room. And I'm thinking, well, that's got to be an awful difficult way to sort of amp up scale revenue if you've got to have 2 licensed professionals in the room for one patient who's paying a one-time fee, or a portion of a fee as part of a service. How do you sort of mitigate those requirements? I mean, you're talking about mitigating it through a specific compound.
Right. Yeah. So the interesting thing about psychedelic drug development is that there are at least three pretty significant components, right? So one being the drug itself, the second being the psychotherapy. And we know that you need to couple the psychotherapy along with the drug to get a durable effect. And then the third component is the setting, right? And where this actually takes place. Companies are focused on that. We're highly focused on the drug and the psychotherapy. We think that very likely that psychotherapy protocol will include a pretreatment session, right? To essentially get patients ready for the journey they're about ready to make. It can be pretty daunting thinking about going into the psychedelic state for their first time. So getting patients prepped for that is really an important kind of first starting point. And then, as you mentioned, then there will be on our current protocol 2 monitors in the session at the same time, with the patient. That's done for safety reasons, among other things. And yes, it's a little bit cumbersome. Those have to be licensed individuals. They're also going to be trained specifically on the psychotherapy protocol that we're creating for that particular therapeutic indication. So we've actually customized that for certain treatment modalities, right? So in our fibromyalgia study, for example, there's one modality. For our binge eating disorder trial, it's slightly different. And in the phantom limb pain, it's yet again slightly augmented to suit those particular patients. But there will be 2 monitors in the session. And then there are also what are called integration sessions. And there'll be a number of those potentially to help the patient kind of solidify the experience and create a more durable effect. So there definitely are, 3 critical pieces. Psychotherapy is an important part along with the drug, and the setting's key as well. And yes, that makes it a little more complex from a commercialization perspective. But we think there's a lot of good examples, such as infusion centers for oncology products, dialysis centers, and sleep clinics, for example, where you've got setup, where you've got unique settings, where you've got other individuals involved that are helping the patient along those experiences, and that are all reimbursed appropriately from payers and providers, and of course approved by the FDA. So we think that business model is probably well proven in other areas of the healthcare system, and will also work here with psychedelic drug development and in this particular area. We know at the end of the day that if you're actually able to solve the problem, and these are big problems in fibromyalgia and phantom limb pain, regional pain syndrome, for example, where there's really not a whole lot of other treatments. We know that if we can solve those problems, that likely we'll get approval, with the right data, and we'll get payers to agree to pay for these treatment sessions.
Sure. So what does the timeline look like until you achieve something approaching commercial profitability?
Yeah, well, so commercial profitability is a very high bar, and it is very far, it's pretty far down the path, for us. But there's immediate milestones that we'll achieve, including obviously getting approval, as well as interim data along the way. So where we are right now is that we've got 3 phase 2A clinical studies with a surrogate oral material that we're testing of psilocybin in these unique therapeutic areas. We're about ready to start dosing patients on those 3 trials here in the next few months. And then we'll have interim data from those studies, which will be a really important proof of concept for us. And then second of all, we're working on our proprietary formulation and our proprietary route of administration, and we'll have data that's supporting significant conversion of a provisional patent. And we'll also be in a position where we can talk specifically about what that formulation is, what the route of administration is, and what the IP landscape looks like. So those are some really important steps. And then in addition to that, we've got a clinical study with our material that will be underway shortly at the University of Wisconsin with Paul Hudson, and we'll have data from that demonstrate what we hope will be equivalent exposure between our formulation, our route of administration, and the standard oral psilocybin. We think that for us will be quite a golden ticket in terms of data and be really, really telling. So we've got a number of studies that are taking place right now that will be generating data this year that we think will be significant proof of concept for us. And that will be sort of a really important step in terms of value creation for investors, well before we get to kind of the higher and longer term milestones of getting to approval, getting for sale, getting to profitability.
Right. Does the regulatory landscape evolution match your sort of pace of development?
Yeah, it's an interesting question, thinking about sort of the decriminalization of psychedelics versus sort of what we're doing, right? So that's certainly one path, and the sooner that we can, work to help support decriminalization of psychedelics, I think will be, useful. Right now, we've got to, of course, work through the FDA, which has its own it's all data driven. So frankly, the rate of our development is very much in sync with that process, and it's all about us generating that data to present to the FDA. So the sooner we can get to these well-controlled studies with our material, the sooner we can present to the FDA and hopefully get approval for our product. In the meantime, we've got to deal with the Drug Enforcement Agency of the DEA. And that's frankly just, because these are Schedule I drugs, as everyone knows, these are logistical challenges to navigate through, which are frankly not going to be, changed in the short run. And even if these drugs are descheduled or if they're decriminalized and taken off Schedule I listing, certainly that will help increase the pace of R&D and eliminate some of the hassle that we've got to work that we go through with the DEA. But frankly, they're somewhat decoupled, right? So that the whole pathway to decriminalize psilocybin and let it be legal to use that very different than our particular kind of traditional ethical pharmaceutical drug development pathway going through the FDA and working within the DEA's guidelines of how you handle Schedule I drugs right now. But we're certainly supportive of decriminalization. We're certainly supportive of the companies that are doing work in other areas of psychedelic drug research. But our focus is on a traditional ethical pharmaceutical pathway to approval, like other standard chemistries in the healthcare industry.
Right. All right, Greg. Well, that's interesting. We're going to follow along with interest and have you appreciate your time today.
Great. Well, terrific to be here. Thanks so much, and look forward to coming back in the future to report on our progress.
You bet. Thanks so much. Bye for now. Yeah, so cheap stock, 20 cents. And like all of these psychedelics.
Yeah. Bit of a correction?
Yeah. This is really reminiscent of the cannabis industry when it first got traction, though. It came out of the chute blazing, and then it sold off for 2 years. It didn't do anything. Remember, it was I think it was almost 2 years before there was any real major headway made. And I think it was when Trudeau came out and said, okay, we're going to make it legal for recreational purposes. And that's when they really started to, money really started to flow. But it's definitely going the way of the dodo here. But this could be a great buying opportunity. All of these psychedelics companies are essentially in a developmental phase where regulations have just for the first time gotten their favor. They're now able to do research on patients. They've got trials underway. All of them are trying to seek some kind of FDA, Health Canada, European Health Commission certification for their product or their process, each involving some novel use of ketamine or psilocybin or MDMA,
right,
or ayahuasca, which is actually a DMT. So look at gold is sold off here mightily.
Well, you know what? A threat of, initially, when these things start to happen, the enemy of gold is higher interest rates. And they can't say it any louder. Whether they do it or not, that's not the point. The point is they think rates are going higher. And if rates are going higher, initially it's bad for gold. But if rates go higher and things start to collapse, then people run into gold. But right now...
Right. Well, gold as a hedge against inflation, if inflation is rising as a result of fiat currency production, then the argument is that your purchasing power will be retained in gold through its rising gold price relative to the debased fiat currency.
Right.
The problem is that markets are so, I'm not going to say manipulated because then I have to put on a tin hat, but they're so influenced by different asset classes and different monetary policies that the average individual can't make heads or tails of it. The other side of that is the futures market leads the spot market around by the nose. And so there's not really, the price of gold at any given moment is not the value of gold in the context of a comparison to like the US dollar. And again, you can't just go down, you can't go down that path of discussion without sounding like you're starting to be a little bit conspiracy.
Yeah, I know, except that, gold has still bought you a nice suit, an ounce of gold.
Yeah.
That old saying, right? Gold is kept up with inflation. An ounce of gold will buy you a tailor-made suit, nice tailor-made suit.
Well, that's interesting because a tailor-made suit, so gold $1,800 USD.
US.
If you're paying $1,800 for a USD tailor-made suit, I mean that's the upper end of the price range in the
Depends where you shop.
affordable jeans. Yeah, if you go Brioni and $5,000 plus.
No,
or
I'm
beyond.
saying that you could get a good suit for. It's not. Let's not make an issue out of this. Let's not go to fisticuffs.
Come on, put up your dukes, Edward.
Put up your dukes.
Yeah, actually, I heard about a Laura Pena suit that was $75,000 made of vicuña wool. Let's talk about our sponsors. So, Voxtur Analytics. Our option on Voxtur is now fully vested. We have a million options at $1.15 per share.
Wow.
Yes, we're not in the money. And if the stock goes up, we stand to make money. But it has to go past $1.15. Voxtur is trading at $1.01 today.
Nice.
Now, I'm going to add a comparable here, and I'm going to add Doma. Doma is the better capitalized, bigger
US
deal,
US version?
US competitor to
They were out
Voxtur.
before Voxtur.
Yeah. So here's Doma's relative performance relative to Voxtur's relative performance since November of last year. Now, the reason this is happening is because Voxtur has by far what we're going to call not just the better mousetrap, but the better set of mousetraps. So Voxtur is its appraisals now platform is now 70% of the appraisals on United Wholesale Mortgage, the 6th largest mortgage wholesaler in the United States. 70% of the appraisals done on that platform are done on ANOW. So that's tens of thousands of mortgages every month done on the ANOW platform. They have other features coming out on the Voxtur Analytics platform that we can't talk about because that constitutes a forward-looking statement. And as a conflicted participant, I can't give my opinion.
Do you feel conflicted when you're lying there at night? You think of tossing and turning. I'm a conflicted guy.
No. That's not what I mean by conflicted. I sleep very well at night lately, Edward, because my option has vested, and now it's just a matter of time. But my expectation, I do believe I can express my expectation as a fully disclosed option holder on this company. I only make money if the stock goes up, but I think this company is going to trade well above where it is now. I think it's going to start to demonstrate $400 million a year run rates in the years ahead. And I think it's going to become the dominant player in the digitized real estate closings universe. I can't say anything more than that because I do have access to insider information, which I cannot disclose. Consider this forward-looking statements disclosure. NuRAN Wireless, because we're also conflicted with NuRAN, but look at that trend since December.
Yeah, now it's breached.
Well, it's breached because of the general market conditions thanks to Jerome Powell.
Okay.
Now, after there's going to be a period of consolidation, or not consolidation, but digestion by the market of Powell's comments. Wow,
let's hope it's not indigestion.
Let's hope it's not indigestion.
You said digestion, period of digestion.
Period of digestion.
Not indigestion.
Indigestion. Indigestion. Digestion.
Indigestion.
Indigestion. That's why I said
indigestion.
Yeah, okay, so here's some other conflicts we have. GMG, I actually sold out the last of my position down here like an idiot.
Like a good book. Look at this. Just at the...
Yeah, at the bottom. That's my expertise, because when this happened, I thought that the market was going to run. I should know better.
You bought some up here at for you?
No, I haven't. But
well, wait a minute. You want to make sure it's really good.
I had to get out of my conflicted position. No. I'm not going to make any predictions about GMG's share price. But those are, let's see, U.S. copper, also conflicted.
Oh, yeah, there's a good one for you.
Yeah. The higher copper goes, the lower U.S. copper goes.
Yeah.
So that means that at some point, this is going to be a buy, because they do have 2 billion pounds of copper, 43,101. Another 2 billion pounds of copper, historic 43,101. And at some point, somebody, somewhere, someday is going to come and take a run at this.
I think copper's got to get over, I hate to say it, but I think it's got to get over $6.
Copper's got to get over $6.
For this thing to get lit up.
Yeah?
Not Look at it. It's not
Well,
carved in
the
stone.
way it's going, if copper went to $6, this thing would be a penny.
Yeah, that's true. That's a good point. Well, let's hope it gets to 10, and we'll buy it at 0.5 cent.
Yeah. So let's see, what other conflicts do I have? Luck. Now, see, I could have sold this. I'm down on it. I've got 120,000 shares, but I'm not selling because I have a degree of expectation that the new management team or the current management team is going to turn things around. Hope springs eternal, as they say. All right, so there you have it. That's our show for today. We'll be back next week. Please write, do tell. Anyways, so show's over. Nothing to see here. Okay. Move on.
Bye-bye.
See you next week.